think with Friday's sell-off, I saw many people calling the top of the markets or declaring that the bubble is bursting. If investors are that quick to call a top just on a 2.7% decline, I just think a lot of good news isn't really priced in. I think there's still a lot of reluctant investors on the sidelines. This liquidation that was triggered over the last 3 days, the estimates are at least 19 billion of liquidations, but it's probably understated. It might be 4 times bigger. It's the largest since 2021. But as you know, that's a lot of volatility and triggers what we call collateral cascades, and that's what happened over the weekend.
Today, as Bitcoin remains down almost 7%, and as the market crash on Friday has investors worried, the crypto market remains in limbo, as crypto investors continue to speculate as to whether we'll see a price drop in Bitcoin and Ethereum in the coming weeks. This crypto cycle is heating up, and Tom Lee remains bullish, with a parabolic rise in the last few months of 2025. Forced selling, leveraged bets, and the usual tug-of-war we see when an asset approaches such a huge barrier. The bigger picture looks very different, though. Analysts are drawing a striking parallel. Ethereum today may be in the same position Bitcoin was back in 2017, when it rocketed from $1,000 into the financial spotlight as Wall Street started paying serious attention. And just like Bitcoin back then, Ethereum is now catching the eyes of institutions, hedge funds, asset managers, and major investors who see its role extending far beyond speculation. Bitcoin has been trading more like a risk asset lately, meaning if the market recovers, Bitcoin is expected to surge alongside it. But the uncertainty is key here. If the market remains stuck in limbo, Bitcoin could face short-term pressure. The community is buzzing, and adoption is spreading across industries from decentralized finance to stablecoins. Even the regulatory environment, often seen as a stumbling block, may be tilting in Ethereum's favor. That makes Ethereum more than just a digital currency. It positions the network as a backbone of future financial infrastructure. And as Tom Lee points out, this is likely just the beginning. With Wall Street's deeper involvement and retail energy still strong, Ethereum's growth story has room to run. The question now isn't if Ethereum will climb higher, but how fast it can write the next chapter in crypto history. Let's get right into the latest interview with Tom Lee, as he gives his market prediction for the days and weeks ahead.
JP Morgan, the biggest and the most powerful bank in the world, is investing $1.5 trillion into the U.S., into things that are going to strengthen sort of U.S. advantages, critically important areas, and at a time when the U.S. is dominating AI, and of course now we have this big tailwind as blockchain is an initiative that Wall Street is building products on. So I think there's a lot of reasons for investors to stay optimistic. And I know there's a lot of talk about bubbles, but I think the thing I would just continue to point out is NVIDIA trades at around 27 times forward earnings. It's still on a PE basis cheaper than Walmart and Costco, which trade at around 47 and 34 times forward earnings.
In a time when interest rates are coming down. So that's just like an elixir for stocks that is very powerful.
That's right. And as you know, CEOs have not been that confident for the last 2.5 years because the Fed's been running tight monetary policy. The ISM's been below 50 for 31 months now. That's the longest stretch in history. I think the sell-off Friday is giving us a bit of a gift because that surge in the VIX, a 32% rise, is the 39th highest ever one-day surge. And the 1-month median return is almost 3%. Of the 38 other instances. So I think the S&P could add, 200 points between today and mid-November.
We're not overly positive in terms of sentiment right now, so that's not late cycle, according to you, at this point. And still a hated rally, $7 trillion on the sidelines, if people decide they want to go into stocks.
Yeah, I think conviction is a measure of whether or not the market is, pricing in too much good news, or that, this is the reason to be buying gold.
Everything's about crypto. You found a reason gold's up, and it's because of crypto. Not directly because of crypto, but you think the incremental buyer in gold there's gold-based stable coins.
Well, there is an interesting correlation we found, which is when I look at Tether's supply of dollars outstanding, it really started to rise about 3 months ago, and that corresponded with gold essentially going up every day. I'm not positive of this, but I think stablecoins, including Tether, may be one of the largest buyers of gold today.
So the people that have been bullish on gold for so long and bearish on crypto and Bitcoin, they're finally getting their big rally in gold, and it's because of the thing they hate so much, crypto and Bitcoin.
Yeah, that's right.
That's so funny.
Tether is proving to be a good meeting ground between Bitcoiners and gold people.
Tom, can you just explain, though, to the extent we can understand it, within at least the Bitcoin world, just how much leverage there is in that system? Because I think one of the things that we were looking at Friday was the possibility, at least, that some of that selling, or maybe even a lot of that selling, came from margin calls at that time.
There's always been a lot of leverage in crypto. I think that the volatility and leverage is what has drawn people into that space, especially when you get outside of Bitcoin and Ethereum. Those two are generally not held on margin. I mean, there is some leverage with what they call perpetuals, but that's why they held up so well over the weekend. It's the largest since 2021. Essentially, you have to go back to FTX. I think there is a lot of leverage in the way people use this product called perpetuals, which is trading on margin, like 3x, 20x. And it lurks and it's held through collateral. People like sort of pledging something that thinks it's safe, but when the price of that collateral drops, it triggers a cascade. Right. And so I think people talk about, so a lot of leverage, yes.
Did you say 20 times?
Yes, there is this very popular trade in crypto called buying a perpetual, which is not necessarily buying the crypto itself, but buying a synthetic version of it with leverage. It was originally created by BitMEX many years ago, but even exchanges like Coinbase offer this as what they call like a 20x or even 50x leverage. So with 5 cents of collateral, you can buy $101 worth of a crypto. Now that's fine if someone's a really good trader, but of course, as you know, if something moves 5%, right, that collateral is lost.
I don't think I appreciated we were talking about 20 or 50x leverage. I mean, that's in a whole other realm. What percentage of the market do you think that makes up in terms of a share of what's happening here?
I think most buyers of Bitcoin and Ethereum are cash buyers because Bitcoin is $2 trillion. You'd see that much leverage if it was out there. But for the active markets, I'm going to guess it's 5% of all trading is with perpetuals. But as you know, that's a lot of volatility, and it triggers what we call collateral cascades, and that's what happened over the weekend.
Ethereum isn't just holding its ground, it's starting to pull ahead. As 2025 winds down, Ethereum has actually outperformed most other major crypto assets, driven by record on-chain activity, surging developer adoption, and growing institutional demand. While Bitcoin continues to anchor the market, Ethereum's momentum is signaling that it could be a real leader in this next phase, setting the stage for what analysts call its strongest run yet. Embracing an unyielding enthusiasm for the Bitcoin realm, Tom Lee confidently predicts that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Tom Lee reassures that a long-expected surge awaits. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all.
There's a lot of leverage both in the traditional financial world with structured notes and equity derivatives and private credit, and there's a corresponding system that exists in crypto. But I think that's why most people who own crypto should view these events as a lesson in leverage, number one, but two, As we know, volatility like this really gives an advantage to an investor because someone got a chance to buy Bitcoin at 107,000 and Ethereum at 3,600, and Ethereum's back to 4,200 now.
So how do you protect yourself? Do you have leverage? And what would you suggest to other investors who are watching right now?
Well, as a first principle, BitMine, which is the largest holder of Ethereum in the world, doesn't use any leverage. It's a fortress balance sheet, taking a page from Jamie Dimon's playbook. You know, large holders have a responsibility to have a super clean balance sheet, and that's a first principle of BitMine. I think most people I know in crypto do not use leverage because they've lived through those systematic drawdowns. So I think most people who have a lot of experience avoid leverage.
Right. And we got to go. But you point out we're not getting any economic data, but there's other places to get some of it. And at this point, the shutdown's probably, friendly for inflation and not great for employment. So the Fed, there's no reason for the Fed, not if they're going to ease, there's no reason from the shutdown that makes it more likely to continue with that cycle, I think is your point.
Yeah, Fed Chair Powell speaks this week, and I think that he's going to lean dovish.
When we think of digital money and digital gold, that's Bitcoin, and that's already been well established. And in fact, that's why many investors will own Bitcoin. But Ethereum is an architecture that we can see Wall Street building on, and AI, and it's not that different than how in 1971 there was two forks. Gold, because the dollar went off the gold standard of gold, became that store value. But then a whole economy was built around making sure the dollar, which was now synthetic, became the standard bearer. And that's what Wall Street did. And in terms of value creation, both created value. Gold is now a $2 trillion network value, and equities, which is really came out of a synthetic dollar, right? We didn't want us to go onto a Deutschmark or yen standard. That's a $40 trillion asset. So I think both come out of crypto, but address different markets. So I think Ethereum can grow even without having any cannibalization or competition with Bitcoin. I think if I took JP Morgan, for instance, and this is something we've written about at Fundstrat, that they are operating and supported by 313,000 employees, but a JP Morgan built on the blockchain might only need 20,000 employees and operate with far greater clarity and vision and efficiency. So JP Morgan may end up being, especially using AI, more of a tech company. They're replacing humans with tech spend and using the blockchain for finality and security. And the multiples of banks should change, going from trading at price to tangible book to actually having a PE multiple. And Kathy Wood has pointed this out. That's exactly what happened with Costco and Walmart, that they used to be traded like typical consumer staples, 15 to 16 times earnings. But because they essentially systematized their business, Walmart and Costco trade 35 to 50 times forward earnings. That's a higher PE multiple than NVIDIA, which trades at 30 times.
Where does all of this leave us? Ethereum has crossed $4,000, weathered short-term volatility, and is now attracting the kind of institutional attention that once catapulted Bitcoin into the mainstream. Analysts are increasingly framing this as Ethereum's 2017 Bitcoin moment, where the groundwork laid over the past decade finally meets global recognition and capital inflows. But here's what makes this cycle different. Ethereum isn't just competing as a digital currency, it's the infrastructure powering decentralized finance, stablecoins, and entire ecosystems of applications that regulators and institutions are beginning to take seriously. That combination of utility and adoption is exactly why many see $5,000 and beyond as not just a price target, but an inevitable milestone. Over the past year, Ethereum has quietly outperformed most other major crypto assets. Tom Lee and other top analysts emphasize this point. Ethereum's real growth story is still ahead of us. With Wall Street leaning in, developers innovating faster than ever, and adoption spreading across industries, Ethereum is positioned to be a defining force as we head into 2026. The bottom line: the short-term swings may grab headlines, but the long-term trajectory is unmistakable. Ethereum is evolving from a promising blockchain into a cornerstone of digital finance and technology. And if history is any guide, the breakout we're seeing now could be just the opening chapter of Ethereum's biggest run yet.